Welcome to the Galileo October monthly update. I'm joined by the head of our wealth business, Yolande. Yolande, thank you so much for joining us.
Hi, Warren. Yeah, it is nice to be here. Thank you very much. Yeah, and I think, if we look outside in Johannesburg, the weather is changing for the better. We went from winter right into summer, and even in Cape Town, where they had this really long and very cold winter, it seems to be picking up. So there's some optimism in the air and things are starting to feel a little bit better.
I must say, if I think about just conversations we're having with our clients, with industry colleagues, asset managers, people in business, it just seems to be slightly less negative, slightly more kind of a spring in the step than, and I know it's spring, but I'm trying not to be cliched, but I feel like it is actually a little bit of a kick up in sentiment, which is always nice.
Yes, and the values and the numbers are showing it, Some clients still feel a little bit uncomfortable and uncertain, and I think it's those people that actually keep an eye on the numbers every day. If we look at what happened throughout the last few months, the numbers are actually up, and it's nice to see, and I think we need to celebrate it. We do that very little, right? We always talk about the downsides, but never about the up. But so the numbers then is up and it's positive, but for those that looked at it every day, it was very volatile. We had huge ups and huge downs, and that just increases uncertainty. And there is lots of research that shows that uncertainty or financial certainty is a feeling. It's not a number. So if you are going to watch those numbers, it's going to probably not make you feel better. But if you look at a longer term and go back to a year ago, where it was and where we are sitting today, it is actually up nicely and very positive.
So I mean, I think, to take out a message from this is someone who's looking at their statements very frequently, they're going to feel probably fairly dissatisfied because things are going all over the place. And we would encourage you, when you are looking at your statements, actually just jump back to the 1 year ago number and look at what it was a year ago, look at the growth that you've had then to now, and just see that progress. And yes, sometimes it's coming off a low base. I mean, things weren't all that good a year ago. So we're not saying that everything's better and that all the bad news is out of the system. But you're right, to kind of snapshot over longer periods, 1, 3, 5 years, I think is much more productive and much more indicative of what's really going on than what's going on every minute or every week or every day. And that's just noise.
Absolutely. And it just make you feel uncomfortable and unhappy about the world. And we don't know what's going to happen tomorrow, of course. But as things stand today, it's looking nice. And I think then the other thing that we always look at at every meeting is the value of the rand. And that has such an emotional impact on people, especially those that need to take money offshore. If we go back a lot of years, and now we're talking 10, 15 years ago, we spoke about 8 rand to the dollar around there. And when the rand moves, it usually moves in big movements, right, and with big percentages. So say we talk about a 10% movement. At that time, it was a cents movement. So it would be 80 cents if it weakened. Today, we're talking about a 2 rand movement if we're talking about a 10% movement. So the feeling about it is that it's much bigger and much more volatile, whereas it's similar kind of movements perhaps, but it's just the number is bigger.
So we always get fooled by percentages, and I think it's important in a situation like this to say the proportion is more important than the value, and that's what you're saying. I mean, 10 cents on 19 rand 10 move is nothing.
Yeah, so you really need to go back to your plan. What is your plan? Is it to take money out? Is it to stay here? What is it that you need to do? And if you're in the situation where you've got a big amount that you need to take offshore, perhaps the rand has a lesser impact than you think. What we suggest is if you're in that situation, that you divide that capital by 3 and take it over a 3-month period. So phase it out and then just do it. And rather get the growth that you can get on the other side in the developed markets. and follow your plan, especially if you've got a long term ahead of you, and most of our clients have a long term ahead of them. People always think shorter term, but we live till our deep 90s, hundreds, right, and even beyond. So it is important to get your money there and then make it start grow.
Yeah, I feel when we look back at a RAND decision after 5 years, and if I look at our history so far, I remember you and I agonizing with our clients about a 50-cent move on the RAND. And 5 years later, we've forgotten that 50 cent. We don't even know what it was, but our clients are materially better off. And that's really the point, is 5 years from now, that actual RAND rate will be a much smaller factor in our lives, and it'll be about capital growth.
And once that plan is implemented, there's a bit more of a peace of mind effect, I think, with clients. Then, Warren, I think there's been a lot of talk about business and the government getting involved with each other, and a lot around Eskom. Can you tell us a little bit more about that?
Yeah, I think one of the big moves that's relatively positive is how business South Africa, through various forums, is kind of waking up and getting a real voice now. And one of the big initiatives is business kind of formulating strategies around crime, how we're actually going to deal with crime, how we're going to get the economy going, and then how we're going to deal with the infrastructure problems of the country. And what's important to understand is business is starting very big initiatives. They've invited the government to come along. It's a different dynamic than the past. They're not just sitting there and saying to the government behind closed doors, please will you do this, please will you do that, and then get ignored. What's happening now is they're taking the lead on certain issues, and they're asking government to come with them. Importantly, and maybe just to touch on the crime one for a second, there are big initiatives that business is doing where they're combining their intelligence services, they're combining their security operations, and sharing that intelligence as business, and sharing it with government. But if government don't do their job, business is carrying on. Business is doing things now to kind of break the corruption cycle, especially financially, where they can implement. And then we've got one of these initiatives with government is NECOM, which is kind of business and government dealing with the national energy crisis. And I'm very encouraged to see business talking about this in a very positive tone. So it's not the politicians taking credit for work they haven't done. This is now business people saying for the first time that they're in agreement for the very first time with strategies that are being implemented at Eskom and at a national level. And secondly, that they're seeing real progress within Eskom and between government and business on initiatives that should unfold. And certainly listening to them, they're relatively confident that we're going to see a material drop in load shedding through 2024, and most likely that we're kind of at worst at stage 1 or 2 by December 2024. That's a significant change from where we are now. At the time of filming, we're dealing with anything from stage 3 to stage 6, and anything in between, and quite volatile conditions. And I think getting a sense from business, they feel probably this period of June 2023 to the end of 2023 is the worst. Once we're through that, things get better because of private initiatives. And then, seeing Kusile, Kusile has pretty much been offline for the bulk of the last year. And yes, Kusile will come online because they're going to kind of sidestep some environmental protections, which is very sad, but it means that we will be getting kind of more consistent electricity from Kusile. That on its own deals with 1 or 2 stages of load shedding. It's a very material impact on our economy.
Yeah, and the power failures and load shedding has such a big impact on sentiment. And once that changes and things become better, I think things changes a lot to the better.
Talking to big business, they can tolerate stage 1 and stage 2. It's actually not, it's not great for the economy, but big business can deal with stage 1 and stage 2. Stage 4 and higher is very hard for a business to deal with. And so, living on a sustained basis with stage 1 or 2, and obviously that means also lots of time where we've got no load shedding, will have a very big impact on the economy. And I think also just to understand, there are enormous numbers of private energy projects that are taking place right now. And we're not going to see that in X thousand megawatts being added to the grid. How we're going to read that is we're going to see the demand on the grid reducing. So at the moment, peak demand on the grid might be 33,000 or 36,000 megawatts of power. I think they call it 33 gigawatts, I'm never sure. But as that peak demand drops, it's because, not because the economy is shrinking, but because actually private power is now so big that the demand on the grid is less. And I think that that's important to understand. Eskom might not be producing a lot more power in 2 years' time, but actually the demand will be a lot less.
And nice to see all the renewables coming on board.
Exactly right.
So if you think about last month, there was quite a lot of numbers coming out on the inflation side, and maybe just to talk around that.
Yeah, I think one of the things that we need to our clients to focus on is, inflation in South Africa is painful because it's a measure of our cost of living. So rising inflation, high inflation means things are more expensive. It's just more expensive to eat, travel, all of those things. And I looked at one of the big national burger chains. 5 years ago, their kind of generic burger was half the price it is today. The thing is exactly the same. 5 years, the cost has doubled. And maybe the health people would say that's good. We shouldn't be eating burgers. We should be eating salads. But that's a measure of cost of living. And so it is something that we talk about, and it is something that we notice. But when we're talking about investments and we're talking about markets, we need to understand the real number we should be focusing on is what's happening to inflation in America. Because inflation in America dictates what happens to interest rates in America. And interest rates in America have an enormous impact on what happens to the rand, what happens to stock markets, what happens to the bond markets. And I think we tend to be quite narrowly focused as South Africans about what's going on here. And we think the rand weakens because of Eskom, or the rand weakens because of the president mumbling something, or Julius Malema saying something. Those are factors. I'm not saying they're irrelevant. So I think just understanding when we look at the interest rate environment in America, we need to just understand that that's the kind of 800-ton machine that moves everything. And what we do in South Africa has an impact, but it's really about interest rates and inflation in America. So we think that the good news is on its way. We're not getting too excited too quickly. We're not going to make big changes for now, but just to stay the course on that decision, and not to worry too much about the noise of SA at the moment. It's always noisy. Thanks, Yolande.